Our next guest says that Chair Jay Powell will maintain a hawkish stance and that we are likely due for a bounce in risk assets. It's kind of interesting to think of all those things. Let's bring in Meghan Graper. She is the global co-head of the investment grade syndicate team at Barclays. And Meghan, this is not you making a positive call about the markets for the year. You just think we've seen so much pain recently that maybe we're due for a bounce, right?
That's exactly right, Becky. I think Fed days have been overwhelmingly positive for markets over the course of the year. If we look at the data, the market has typically rallied on the heels of most meetings, with the exception of Jackson Hole. If you look at investment grade credit, on average, we've been about 4 basis points tighter on these days. And I think, at Barclays, our view is that today's unlikely to depart from that script, in large part due to what you alluded to, which is just how sharply markets have repriced in recent weeks, as investors have attempted to de-risk heading into this meeting. So not only have you seen that in the equity markets, but this relentless rise in rates that has really defined us for the better part of the last several weeks. 2-year treasuries, headed for the biggest annual increase since 1994. And 10-year treasuries, even though off the peak, the highest levels we've seen since 2011. So, in my eyes, we are due for a bounce. I think we get another one of these relief rallies that react towards reinforcing that we're headed in the right direction. But I also think it's likely to be short-lived as the market sort of reawakens to the reality that we aren't anywhere close to the 2% end game. And that long game is really where the problem resides for most of the market.
That sounds like a pretty reasonable and realistic expectation. Just if this meeting goes as planned, we're expecting 75 basis points. What if, though, the Fed actually tries to shock markets a little bit and throws in a 100 basis point hike? Or if Powell just comes out, Fed Chairman Powell comes out and just says something that catches the markets off guard? I don't know what he could possibly say, but what about those what if scenarios? If there's some sort of a surprise, how do you think the market reacts?
Yeah, we've had a bit of a global reality check if we look at what's played out over the course of the last couple of weeks. I think we only have to look to how quickly the market unwound, so that soft landing narrative that we saw post CPI, to have a lens in terms of how investors in the street are positioned heading into today's meetings. And while there's some probability of 104.5% as the terminal rate priced in, I think that's quite aggressive in our view relative to where we stand. We're still calling for 75, and we're in the 410 camp for the terminal rate. But I think central banks have been nothing if not resolute. Powell has remained firmly on message. I think we saw that galvanized by some of the pre-blackout Fed speak as well. So I think they're going to be loath to repeat some of the mistakes of July, having now regained credibility. So, it might be challenging, but I think they're going to be hard pressed to deviate from that Jackson Hole script for fear of catching the market off guard. I think 100 is likely to be perceived as a bit of an overreach, mostly because, that monthly data is backward looking, and it's in the context of policy that also lags. I think we've also seen that in the discounting of inflation expectations, which are still well off the peak. And we saw that in the UMich number last Friday. I think inflation break-evens have been echoing a similar sentiment. So I think chances of 100 are remote. I think we could make a case it's a step too far. And that's despite the Fed's overarching intent. So I think it'd be a real negative catalyst and could create some distortions, another bout of volatility if they were to proceed down that path. But again, that's not the baseline expectation.